Hello everyone. Today we are going to look at one of the various ways through which you can reduce your tax liability. This video is part of a larger series on deductions. Now, tax deductions are provisions through which you can reduce the amount of income tax that you pay. This is subtracted from your gross total income at the time of filing your tax return. Of the various options available, one such option is deduction under Section 80G of the Income Tax Act. Section 80G of the Income Tax Act helps taxpayers to reduce their tax liabilities by donating to various notified charitable institutions and relief funds. Thus, it is a way through which you can save tax by also benefiting the society. No, not all donations are eligible for deduction under 80G. Only donations made to institutions or relief funds specified by the Income Tax Department qualify under this section. Also, donations made to foreign institutions or political parties are not qualified as deduction under 80G. Any taxpayer, whether it is an individual, an HUF, or a company or a firm, can avail this deduction. The only condition is that while making the donation, you need to ensure that it is made either through an online mode or via a check. Also, from financial year 2017-18 onwards, any cash donation exceeding Rs 2,000 is not eligible for deduction under this section. Also, donations in kind, whether it's in the form of clothes, groceries or medicines, etc., is not eligible for deduction. Now, the amount of deduction that you can claim depends on the kind of institution that you are donating to. Now, donations to certain category of institutions are eligible for deduction of either 50% or 100%. However, in other cases, there is an upper limit on the amount that can be claimed. In such cases, deduction of 50 or 100% subjected to an upper limit of 10% of adjusted gross total income is applicable. Now, the adjusted gross total income is calculated in the following manner. It is gross total income minus all exempted income, minus all long-term capital gain, minus all deductions under Section 80C to 80U except Section 80G. Here is a list of donations which qualify for 100% deduction without any upper limit and 50% deduction without any upper limit. Here is a list of institutions, the donations to which are eligible for 100% deduction subjected to an upper limit and 50% deduction subjected to an upper limit. Now, to avail the donation, you need to ensure that you have a duly stamped receipt obtained from the trust or the donee that you have donated to. Now, the receipt needs to contain the name, the PAN, and the address of the donee, the name of the donor, and the amount donated. The receipt should also contain the registration number issued to the organization by the Income Tax Department under 80G, and the validity of such registration should also be mentioned. You should also make sure that if in case a donation is eligible for 100% deduction, then you need to obtain Form 58 from the donor. We hope you found this video to be helpful. In case you have any further queries, either write them in the comment section below, or you can also visit CA Club India's forum section, the link to which is given in the description box. Our website hosts over 3 million users, and it's highly likely that your questions will be answered over there.